So most investors set goals, but they still fail. Why? Because goals without systems are just wishes. Take Warren Buffett, for example. He didn't become a billionaire by chasing numbers. He used a very simple system: buy great businesses at fair prices and hold forever. So if you want real success in investing, stop setting vague goals. Start building systems that guide your behavior, even when the market gets crazy. That's how you win consistently. Hi there, this is a value investor. I help people save and invest intelligently. Why do I say goals are not enough? The reason is simple. Goals give you direction, but they don't give discipline. Most investors have goals like I want to double my money or I want to retire early, but they don't have a real method to get there. The will is there. They want to do something good, but they don't have what it actually takes to keep at it long enough to be successful. Goals are great, but in volatile markets, those goals, they crumble without systems. With the right system, you achieve goals as a byproduct. You actually achieve those goals by sticking with a particular system. So this is what most people struggle with when they are investing. Someone will say, I want to aim for 15% return every single year. Whilst that's a very good goal, but that's not how the market works. Sometimes the market goes down 20% and you can't expect your portfolio to do 20% return when the market has just dipped 20%. That's not realistic. So you have to average your returns over, say, 5 or 10 years to actually see how you are performing relative to the market. Without a system, fear takes over. You sell low, you miss the rebound, and all sorts of things happen. So goals don't help people stay invested because they lacked a consistent process. This is what happens in the market. A goal doesn't help you to stay invested. You might have a lovely goal to retire early or to double your money in 10 years, but when that market crash hits, it takes a very robust and solid system to make you stay invested. So I'm going to go through these systems with you in a moment. So stay tuned. So systems turn ambition into repeatable action. For example, there's a system that Warren Buffett uses, which is called the punch card system. So the punch card system is a system where there's meticulous research and due diligence before a stock is bought. It's as if you only have to choose 20 stocks in your life. And if you use two stocks, that means you've got 18 left. And those 18 are the only ones that you are going to buy throughout your whole entire life. So when you make a decision, you make it carefully and not waste those investment chances. So that encourages you to go for quality, and it also encourages you to be patient. Systems remove emotions and they create automatic discipline. And with the right system, you can achieve goals as a byproduct, not by force. I've got some examples. I've promised I was going to give you examples of how you can build systems, and these are just examples of some systems that you can take and you can adopt into your investing. So, number one is only buy businesses that you understand. Buy stocks that are in your circle of competence. And this helps you to hold when there is noise. If you understand the company, not everything is going to move you because you understand what you are holding. Buy at a significant discount to intrinsic value. That's number two. And when you buy at a discount, that's a margin of safety that allows you to actually cushion yourself when market prices fall. Hold long term unless fundamentals weaken. You're not just reacting to market news, you are buying into a company because you understand it. The short term news on Wall Street doesn't move you because you know what you're holding. The fourth one is limit portfolio turnover. That's actually a system that feeds into holding long term and also buying businesses that you understand. If you understand the business, you're not going to sell just because some analysts somewhere have downgraded the stock. And then the last one is review positions quarterly, not daily. I used to review my positions daily, and I've stopped doing this, and I've had so much peace of mind because of this. And once you know what you're holding, you don't have to go and check it every day. I do listen to the news, but I don't check my stock portfolio every day. Another point that I've not put in here, but which can be useful, is to set up a direct debit that actually makes investing a second nature. So you can set up a direct debit that goes into your broker, for example. So you're putting aside money every single month, come rain, come sunshine, and that helps you to be consistent in investing. So the takeaway is that best investors like Warren Buffett, Peter Lynch, they didn't succeed by chasing hot stocks. They built systems, and they patiently accumulated undervalued assets and held them through the noise. If you want to be consistent in investing, focus on building a process. Set up a system that filters decisions and controls risk. Great investing isn't about brilliance, it's about behavior. And this is why, even in the CFA program right now, they have introduced behavioral finance, because it's everything. It's everything. People are creatures of habit, they're creatures of emotion, and and markets sometimes follow those emotions. So if you are master of your own emotions, you will be able to beat the market. So systems are the scaffolding for consistent behavior. Instead of setting goals, set systems and you will succeed. If you've enjoyed this video, please like, subscribe, share. It helps this video be discovered by other people who want to be financially free just like you. This is the Value Investor. Till next time, cheers.